Okay, fantastic. Well, good afternoon, everyone. First off, thanks for flexibility and schedule. My long-standing, the agenda to a long-standing convention I've attended for some reason got changed this year and caused a bit of an issue. So let's get out of the gate. We'll call to order. Confirmation of a quorum, and has the press been notified?
Yes, we do have a quorum and the press has been notified.
All right, fantastic. And we have the minutes from the previous meeting, which was held on May the 18th. Any questions, any changes that might need to be made, typos, those types of things? Bring those forward. If not, I'll entertain a motion to accept the minutes as typed.
I'll make that motion.
And I'll second it.
And second. And thank you very much. And all in favor say aye. And any opposed say aye. Okay. Sorry, I was working off of the agenda that went away, so I think Tracy's next, if I'm not mistaken. So Tracy, you have the floor.
Thank you, Mr. Chairman. Good afternoon, everyone. Sam, if you would scroll to the first, there we go. Yes, there we go. This is agenda item number 3, and this review of some financial highlights for the last 3 fiscal years. This is something Jim Statler's brought to you all over the past couple of years. So I just want to highlight some things for our year end. After myself, Brad Shelley from Crow will go over our actual financial statements for year end. Starting with the top, you can see a review of our secondary market trading gains. The number for fiscal 23 is not as good as they've been in past years. Looking over to your left, we sold $500 million of loans to the secondary market, resulting in $6.3 million in gains. That's down pretty drastically from prior years. We've talked about that over the last year or so. We had $14 million in gains in fiscal 22 and $34 million in gains in fiscal 21. Essentially, it's just not much investor appetite anymore. We started the year selling loans in a 5% coupon. We ended the year selling in 6.5% coupon, and investor demand is not there, with fears that those loans will prepay and they don't want to pay premiums for them. So you'll hear in a little bit, we've switched our financing plan a bit, and we're in the bond market again to finance mortgages. I'll talk about that here in the end. Going down a little bit further on the page, looking at the servicing portfolio, we ended the fiscal year with a portfolio just under $3 billion. If you recall from the August board meeting, we did hit $3 billion in August. So we've got a pretty robust portfolio. Despite the market, we did pretty well this year, and that paired with low payoffs, with refinancing pretty much stopped. We had a good year. We've been growing our portfolio. Most of that is grown in servicing for others at the expense of the indenture portfolio, but that has been a plan all along, so that's not a surprise. Going down to the very bottom of the first page here, the weighted average servicing fee. The servicing fee for others is at 31.6 basis points. That's a 0.1 basis point increase. We'll take it. That's about $25,000 increase in servicing income. So we feel like we're doing pretty well there. Moving to the next page. Also telling over years, our delinquency ratio. At year end, we had a delinquency ratio of 4.29%, which was down from 4.79% in 2022 and 5.91% in 2021. This is predominantly all in the 90-plus day delinquent loans, which dropped from 4.3% in 2021 down to 1.48%, almost 1.5% in 23. And this is almost completely evidenced by loans coming off of COVID forbearance. So most of those loans sat in the COVID forbearance status for 2 years, and we are working those through our loss MIT and claims process. The ones that we cannot get through claims process and loss MIT are reflected in the foreclosures. So looking at the foreclosures, the ratios have slowly increased over the last 2 years. There was a foreclosure moratorium during COVID where we couldn't foreclose on a property where borrowers were still residing in the home. And now we can proceed. This ratio increased, but we think it's leveling off now. And then the financing plan, point 1 and 2 there. First off, we don't have any fixed rate tax plans eligible for refunding through the end of the year. And we are going to continue monitoring our variable rate tax plans. We'll call those if we deem that necessary. And then our bigger financing plan in terms of funding mortgages, I'll just read through this statement here. Though the secondary market mortgage program continues to generate some profit, management has determined that issuing single-family tax-exempt housing revenue bonds will provide additional funding to augment the secondary market program. After board approval in July, we issued approximately $98 million in single-family housing revenue bonds just this month, and they are due to close next week on the 5th. As private activity bond cap is limited, management will continue to monitor its availability and likely develop a financing plan to issue additional MRBs in coming months. We do think that running dual programs is best execution at this time. We are on the street with a much lower interest rate with the MRBs. We're at 6% right now. So we've had a lot of volume through that. Those are funded through the tax-exempt bonds. And then we're still offering our secondary market program. Income restrictions on MRBs are such that we can't serve everyone. They're a lot more limited, but we can catch other first-time home buyers for the secondary market. So our plan there is in the October board meeting, we will likely come to the board requesting approval for a financing plan to do another single-family bond issuance. So that's kind of our plan going forward since the secondary market is not as fruitful as it has been in prior years. That's just a quick report out on kind of the single family servicing side of the business. Does anybody have any questions? Hearing none, I will turn it back over to Chairman Brunson.
Thank you very much. And that was informative, correct? Not requiring any type of vote.
That's correct.
Okay. Well, thank you for that, Tracy. Next, I'm going to turn it over to Brad Snelly, I believe is how it's pronounced. Brad is, of course, with Crow. Brad, you have the floor.
All right. Thank you. I appreciate it. Yeah, my name's Brad Shelley. I'm a partner at Crow and work with a lot of different governmental agencies, and glad to be with you this afternoon to walk through a few of the highlights of the financial statements and the audit reports. So we'll jump right in here. I'm gonna, before we get started here, I don't know, Sam, are you controlling the slides?
I am.
Do we just have the short form version of the financials, or do we have the other in here as well?
This is short form. Yeah.
Short form. Okay. Okay. So we'll start with the short form, and then I'll just briefly touch on a couple of highlights from the other two forms. So if you jump ahead to page 1, so this is really the start of the audit. The first 3 pages are comprised of independent auditors report, and this is essentially what we are providing based on our testing. So we go through and we provide an audit opinion based on the testing that we have performed. That's what you'll see in the first 2 paragraphs. And so we are providing an unmodified opinion on your financial statements, which includes the governmental activities, business type activities, each major fund, which is presented in the financial statements, and then aggregate remaining information, which includes the custodial as well. From there, list a couple of paragraphs about the responsibilities of management, and that's really just as a reminder, management is responsible for the financial statements, preparation of the financial statements. Our responsibilities are listed on the following page, and really, again, that includes performing tests and providing an audit opinion. If you scroll down towards the bottom of the second page, you'll see required supplementary information paragraph. This is in relation to management's discussion and analysis, or MD&A, which is on the next few pages. We'll talk through that in just a minute. This is limited procedures here, so we aren't providing any opinion on the MD&A numbers. We do compare the MD&A, we do tie out the numbers that are on there to the basic financial statements, but because the MD&A includes some explanations for variances and transactions, things like that, these are unaudited, and that's normal. If you go to the next page, the last two paragraphs of the audit report, the supplementary information is, in this particular case, is referring to the combining financial statements of the housing revenue bond funds. In this case, we're providing what's called an in relation to opinion. So we do compare those again to the basic financial statements. We are not testing to that level of each individual fund, but we are testing to the overall housing revenue bond fund level. As you may be aware, there's actually three total audit reports. So there's this one that we refer to as the short form that basically just includes the financial statements. There is what we refer to as a long form that believes this single audit reports under uniform guidance on the front of it. That one includes these same financial statements plus two additional reports related to your federal grants. And so we'll talk through that in a minute, but there's some different language in the supplementary information in that one. And then the third version is the Ginnie Mae version of the financial statements, which includes the short form plus 4 schedules that are required by Ginnie Mae. So just again, wanted you to be aware of those. This wording and the supplementary information varies slightly depending on which version. You go ahead and move into the first section here is the MD&A. This is what I mentioned. Kind of gives you some highlights, and this is helpful to give comparative information. So I won't read through all these highlights here, but this gives you some of the overall information, transactions during the year. If you go to the following page, I believe it's the next page. Let's go one more. So here at the bottom, you'll see the very summarized version of your statement of net position sheet. You'll see the variation year over year. As you look at as you see the far right columns, that's your total corporation. So the first 2 columns are the governmental activities. The next 2 columns is your business type activities. That's really where most of your loan activity is. And then the corporation is both of those combined. I'll focus primarily on the corporation throughout here because I view it all as really one entity, despite how it is reported from an accounting standard standpoint. As you look at the total assets, it decreased there in total assets of about $70 million, a little over $70 million. That's primarily going to be in your housing mortgage loan balances and then in your cash balances. So the primary driver of the cash balance decreasing is a combination of some timing, but then really a lot of it is spending and recognizing revenue related to grant funds that you received in the past. You hadn't actually spent them yet, so they were showing up as unearned. Those, as you spend that, obviously the cash balance goes down and the liability associated with that goes down, which leads into the next part of the liabilities also decreased if you scroll back up just a little bit. Total liabilities decreased from $420 million to $326 million. Again, that is the spending of those unearned grant revenues from the previous year, so that balances went down. Unearned revenue this year is about $103 million. Last year is about $163 million, so that's about $60 million of the difference. The remainder of the difference is primarily payment on revenue bonds. So as you continue to pay down those revenue bonds, the balance decreases. That gets you to your net position, which is essentially equivalent to your equity. So it's the difference between your assets and liabilities. And you do see an increase in your net position this year, primarily in that unrestricted category. and that's related to the transactions I mentioned above. If you go to the next page, this is your statement of activities or income statement. Again, I'll focus primarily on the right-hand side of those two columns. You'll see your revenues did decrease this year. That's primarily due to grant funding, and it's a little bit difficult to compare, especially with all of the different COVID money that's come through and some different grants that have came through the past few years. But so more of that COVID money was spent in 2022 as that starts to dwindle down in 2023. You see some decreases there. Correspondingly, though, you see a decrease in expenses. As you might expect, as you look at the eviction relief funds, that's really where the bulk of the decrease in expenses came from, as there were less grant funds there to be spent. Your excess before transfers and then your net position change is about $19 million positive this year compared to about $24 million last year. So again, from a financial statement standpoint, a positive year. From here, I'm going to go ahead and skip through a few pages. If you go to next page, one more page, I think. So this financial outlook is helpful. This has some information in here about not only FY23, but looking forward a little bit from management. So just this is an important section to kind of explain what's going on with the organization and the environment. As you scroll through a couple more pages, I think it's page 15, you'll get to the start of the basic financial statements. And so this is really the start of where we are providing our opinion on these financial statements. Again, this is much more detailed, so I won't go through this. As I touched on some of the high points earlier as we walked through the MD&A, but this is your statement of net position. On the following page is your statement of activities. This is the corporation-wide information. So again, this is a little bit different view, but it gives you your governmental activities in the top section and your business type activities in the middle section. You scroll ahead. The next few pages here are the governmental funds, both the balance sheet, the income statement. Then you lead into the proprietary funds or the business type activities. Again, a balance sheet, which is where you're currently at. One more page gets you to your income statement there. And then you'll see, skip to the next page, a statement of cash flows. And this is just for those proprietary funds. So there is no statement of cash flows required for government funds. The last couple of pages here of the basic financial statements are the statement of fiduciary funds, and this is the net position here. These are, again, for the agency funds, escrow funds, replacement reserve funds, all those funds that you're holding on behalf of others. Those show up here. So you do have about $62 million in cash, small amount of liabilities related to that. The other $60.9 million is restricted for those individuals and organizations. On the following page, you'll see the statement of changes in net position. Again, this just shows the activities, not much of a change during the year. From here, this leads into the notes to the financial statements, and this is probably a good point to discuss. There weren't really any new significant accounting standards that impacted KHC this year. The two most prevalent or the most common, depending on whether you have any kind of government accounting background or not, the two most common are talked about are GASB 94 and GASB 96. GASB 94 is related to public-private or public-public type of arrangements. The KHC doesn't have any of those agreements, so nothing to report there. And then the other one is GASB 96, which is related to subscription-based information technology arrangements, or SPITAs. So these are, I think, similar to a lease, but for subscription assets for cloud computing, software, things like that. And so management did go through and evaluate those, came up with a listing of about 40 different agreements that were out there that potentially fall in that category. And based on their assertion, our testing, there wasn't a material amount of asset and liability to be reported there. So nothing was reported. That'll be something that they'll continue to track moving forward. If you do enter into agreements that extend out into several years, that could change to where maybe it becomes a more material activity and needs to be recorded. But at this point in time, nothing's been reported for those. The accounting for that is pretty simple, though. So even if it does come on in a future year, it is essentially reporting an asset and a liability for the same amount. It's just really trying to recognize that you have the right to use that asset in the subscription software. So having said all that, the rest of the footnotes here in note A, note B, nothing's really changed here. So nothing to report. Note C goes through your cash and cash equivalents and investments. Again, I'm going to just skip through the notes here because I don't think there's anything in here that's really of any note until you get to note M, where we have some of the subsequent events. Disclose the bond purchase agreement in there for the Series A bonds. Yep, there at the top of the page. And then we do have in a note on the top of page 39. The KHC will be receiving about $20 million related to the Rural Housing Trust Fund. But nothing's been recorded there, so it's just a subsequent event at this point. I think that covers everything on the short form. We do have the supplementary schedules again of the housing revenue bond funds, but I won't go through that in detail. Those are there for your viewing if you'd like. Any questions on those before I go through quickly the results from the uniform guidance audit?
Committee members have any questions for Brad for this section? Okay. Thanks, Brad. We'll go ahead and proceed.
Okay. And I don't know, Sam, do you have the long form to pull up? If not, I can share my screen real quick.
I do not. Let me give you the option to share.
Okay.
Screen. Guess I have to stop sharing. Sorry, give me just one moment here.
Yeah, no, that's fine.
I'm not sure how to do that.
Let me see if I can I'll just try doing it and see if it lets me.
Usually those three dots.
Yeah, there you go. It's working.
Okay. Okay, so you can see this okay. There's, as I mentioned, second part of this is the uniform guidance audit related to the federal grants. And obviously you do have a number of federal grants, so there's a good amount of testing to do, and we'll get into that. But this year we were required to test 7 major programs, which I believe is the most we've ever had to test for you all. So that's not really a record that we are trying to set, and your side probably doesn't enjoy that record either, but nonetheless, we did have 7 programs to test. Related to that, there's a couple of different reports here, so I'll go through these. The first one is related to government auditing standards, and so this 2-page report is really just in accordance with those government auditing standards and is looking at your financial statements as a whole. And so what we're reporting on is whether there is any internal controls, findings that need to be reported, and we have nothing to report there, so no internal control issues. And then on the second page is the report on compliance and other matters, and that's where we would identify any issues of non-compliance, any kind of regulations, laws, violations there. Nothing came to our attention, so nothing to report there. The second report is related to uniform guidance, and each major federal programs compliance. So the first section here is a report on compliance for each major federal program. As I mentioned, there are 7 of those, and so we'll go through those 7 in just a few minutes. Based on our testing, we did not identify any issues of non-compliance with those major programs. And then additionally, we did not identify types of internal control deficiencies, either significant deficiencies or material weaknesses to report related to those major programs. So obviously very good results, clean audit report, and definitely happy to be able to present that to you all. Kudos to the entire team on KHC for not only preparing the financial statements in accordance with government auditing standards, with GAAP, and having all the financial information correctly, but having all of the federal grants in compliance as well, not having internal control issues there, which again, with as many grants as you have, can be pretty easy to run into issues. On the next page here, and this I apologize, it's difficult to read probably. This is how many programs you have. This is the schedule of expenditures of federal awards for fiscal year 23. So this lists out each of the federal grants that you have. So this just gives you an idea of the volume of grant activity that you have as you scroll through this, and then it continues on to the next page. So about $809 million of federal expenditures during the year. About 47 million of that was passed along to subrecipients, but you still had ultimately the responsibility for those grants. So we go to the next page here. This is just your notes to this. CFA discloses some of the loans that are outstanding, and some of these programs are loan programs, some of them grant programs. And this schedule of findings and question costs really gives you a summarized version of what I just mentioned. So you want to see all these X's on the right-hand side. That means you didn't have any findings, there were no issues, no non-compliance. So that's all positive. So you go down to the bottom, you'll see that you do have, these are the 7 major programs that we tested this year. So I won't read them off, but you can see each of the 7 listed here. We did do testing over those in accordance with the compliance requirements laid out by the LP. The last thing here, auditee qualified as a low-risk auditee, and you'll see we have that checked. That is a result of findings from the FY21 audit. If you recall, those findings carry over and they kind of stay on your record for 2 years. So last year, if I'm remembering correctly, we did have a couple of findings, as we'll see here. So we just had one, and the one was related to the review of the CFA. That finding was remediated this year. That one was one that we had reported as a significant deficiency, so that doesn't impact your low risk evaluation. So as you move into FY24 and looking forward to next year, I expect this to be marked as yes, and you'll go back to being a low risk auditee. What that means from a testing standpoint or from an audit standpoint is when you are considered a low risk auditee, the auditor is only required to test 20% of your federal expenditures. So this year you had 800 million of federal expenditures. We'd be required to test at least 160 million of that. When you are not low risk, it bumps up to 40%. And so that is really what partially drove the increase in the number of major programs, having to test 7 of those, is because we had to get to that 40% threshold. So there were a number of factors. Some of these are newer programs, new type A programs that hit about 50 million for the first time. Those were required to be tested. Some of them hadn't been tested in the past 2 years, which is also a requirement. So a number of different requirements that are factors that resulted in that needing to have 7 major programs tested. But I'd look for next year to that be probably more in the 4 to 5 range. That's really it. The last thing I'll point out here, really just briefly, is because I have it pulled up here, is the Ginnie Mae financial statements. Again, the same information, same basic financial statements. There are just these four schedules that are included in here that are required. So it just goes through some of the required calculations of net worth on this page. The following page goes through some of the capital requirements, liquid asset requirement calculation, and then the insurance requirements. So again, just wanted to point that out. This is the third version of the financial statements that you may potentially see at some point that we're issuing, and that's really the only difference on those. So that's everything I wanted to cover from my side of things. We are in the final stages of wrapping this up. We have these financial statements are actually in the final review stage today. I expect to get back any comments on those today or early tomorrow. Not expecting anything major. Typically, it's just maybe some wording changes, formatting changes, things like that. Don't expect any numbers to change. So feel like we are in a good position to be able to finalize and issue these financial statements likely tomorrow.
Thank you, Brad. Does any members of the committee have any questions, or any of the staff have any questions? I have one, Brad, and I may have heard it wrong because every now and then your microphone was kind of breaking a little bit. But did you say that I guess you were kind of referring to the length of time on this particular project. I thought you said there were some programs that had not been tested in a while, contrary to policy. Did I hear that correctly?
Yeah. So the way the federal grant testing works is there are what's called a type A program and a type B program, and that's dependent on a calculation based on how many or how much dollars you've spent. But for this particular year, that threshold for a type A was $3 million. And so any grant programs that you have, grant or loan programs that are federally funded that are above $3 million, those have to be tested once every 3 years. And so there were some grant programs that had went above that $3 million threshold for the first time that became a type A program. So those had to be tested this year because they hadn't been required to be tested.
Okay, that's the part I didn't hear. Gotcha. Thanks for the clarification.
Yep.
Okay.
No problem.
All right. Management, Sam's going to put you in timeout for a little bit.
In just a moment. Folks in the waiting room.
Recording in
we're all
progress.
back.
Okay, great. Thank you everyone for your patience. At this point in time, I'd like to entertain a motion for the acceptance of the audit report that was just delivered from Brad. Do I have a motion?
So moved.
All right. And a second?
Second.
All right. All in favor, say aye.
Aye.
Any opposed? Okay, motion passes. Any other matters to be brought to before the committee?
Mr. Chairman, I'd just like to make a comment. Mike Bianco, our controller, and Kevin Field, our director over internal audit, are on this call, and I just want to thank them and express gratitude for all their work getting us through this audit, as well as Brad and the Crow team. I think everybody worked together very, very well, and I'm just really pleased with the way this audit process went. So I just want to put that on the record. Thank you.
Thanks, Tracy. I'll second those remarks. Anyone else? All right, then entertain a motion for adjournment.
So moved.
All right, second.
Second.
All in favor, say aye.
Aye.
All right. Thanks, everyone. Thanks, Sam.
Thank you.
Thank you.
Good afternoon.
Good.